You have 60 days to get your hands on Bitcoin, to get your stuff together. Yesterday I made a video saying that after you get to 0.28 Bitcoin, you should stop. And basically what the whole point of that video was is accumulate Bitcoin if you want to, but then eventually when you hit whatever goal you've set, stop and try to build up other assets as well. So you're not just buying one asset for 5 or 10 years in a row. Sure, that might pay off, but also there are risks in that as well. Today, I'm taking the other side of it, which is like, hey, if you haven't gotten to your number, whatever goal you set for the bear market, assuming you want to stack Bitcoin, well, we have about 60 days until we typically bottom. So we'll look at that. We'll also be going through a stock that I like a lot, and it's down after earnings. I think it's a good company to buy. We'll also be going through why the AI trade continues, and Alphabet just announced that they're going to try to raise another $25 billion. So why is that? Why are they raising so much capital? How much are they going to spend? Who's this going to help? Is this going to hurt the hyperscalers? We'll talk about all of this. If you don't mind, though, hit subscribe so you can see future videos just like this one. If you want to trade crypto or stocks, there are links underneath the video. You can check out the link, for example, to Ubit. You can see I actually have an NVIDIA long position. I've had this for a while over on Ubit. The cool thing is, like, I could have opened up an option position. The problem with options, twofold, I see. Options, you need to be able to buy 100 shares or 100 shares worth. Contracts in general are sold in 100 share increments. So I want to long NVIDIA, but maybe I wouldn't have enough capital to do it with an option. So I had some money left over, about $268, and I set up a long trade. So you're not really confined by the amount of money that you have like you are in options contracts. The other thing is I've held this open for a while. I think a couple months now. So if I would have done this with a typical option, kind of would have been screwed, because if I had bought anything that was just a couple months out, I would have been past my timeline. So I would have lost the money. Instead, I'm actually going back in the green today. So if you want to trade stocks, for example, with leverage, there are links to BidFi and to Ubit and to BTCC in the link tree. Not saying that that's great for your long-term portfolio. This is more of a trading strategy, but you can check it out. They also allow you to get extra bonuses, like BidFi has this supercharged deposit event where you can get up to 2,000 USDT. And BTCC also allows you to get a 10% deposit bonus on your first time deposit. So check those out. Now, the market is a little bit back and forth right now. We're just slightly red. It's been a pretty volatile couple weeks because we've had earnings. A lot of big tech earnings. A lot of retail favorites have been announcing earnings this week with Palantir, Elf. We've had a handful of other ones too. Like one that I'll talk about later, Melly, a stock that I really like. And they're big swings, right? Last week we had the major tech companies. What I want to focus on, though, first is this news. Alphabet is going to raise another $25 billion from bond sale. Now, most likely this is going to be more. A lot of the time these are oversubscribed. This is exactly how much Amazon raised 1 month ago. Google also raised more than $30 billion in February and $25 billion in November. So just think about that. That was 6 months ago. And then 3 months before that, they did another $25 billion. So, I mean, they're most likely going to raise another $30 billion. So in the last year, we're talking about $85 billion from bonds. They're going to pay about 1.4% over what treasuries are. At least that's what the report says. They're going to do a bunch of different duration bonds. So you could get some 2-year bonds, some 8-year bonds, 10-year, 20-year, 30-year. And like these will be sold off and put into different products like money markets and CDs and that kind of thing. Like they'll get yield from that. So really interesting here. Do they need to sell and sell these bonds? No, they actually are in a great cash position. They have $144 billion of net cash. Their cash actually went up significantly last quarter. which is kind of counterintuitive. You think they obviously need this money bad. They don't have cash if they're raising bond sales, but no, they actually, you can see, have a lot of cash on their balance sheet, but they're spending a lot, and it's ramping up quickly. Last quarter, they spent about $8 or $9 billion more than the quarter before, which they spent like $8 billion more than the quarter before that, and then $4 or $5 billion more than the quarter before that. So like they're ramping up exponentially their capex spend. I think they guided for about $200 billion this year, and they said they'll have significantly more next year. Now, why do I bring this up? Well, we have insane rates of growth coming from the cloud. So with Google, they went from 62% revenue growth up to 82% last quarter. Their revenue coming from, let's just look at Google Cloud here alone, is growing, like I said, 82% year over year. But you can see how exponential this is. Over the last 5 years, it's averaged 40%. So it was still growing quickly, but they're seeing massive demand. So they're trying to raise as much as possible right now while they can. You know, the last thing they want is for them to have been able to take advantage of the bond market. And then for some reason we go into a recession, depression, something like that. They can't get access to capital. They have to grow slower. Like this is a race on CapEx. They didn't even lay out how much they're going to spend next year. Maybe it's 300 billion. Maybe it's more. Like they could easily, I think, spend $300 billion next year. So they're raising as much as possible now. Keep in mind, they do have a lot of cash flow. It might not look like it because their free cash flow is pretty low right now, if not negative. I think they just went negative for the first time. But they do have a significant amount of money coming in from operations as well. And as they continue to increase revenue, and their margins get better, they'll be able to spend more and more on CapEx just organically. But how does this affect the market? It keeps the AI trade going. Like if they're going to raise 25 billion or 30 billion, that signals they're not slowing down. That signals they're going to spend a lot with NVIDIA. They're going to spend a lot with AMD. They're going to spend a lot on Micron memory. They're going to spend a lot in general on infrastructure for all the other companies that, are building these AI data centers. This means that that they're going to continue to stimulate the economy. And that also means Amazon's going to be forced to do the same thing. Microsoft's going to be forced to do the same thing. The last thing those companies want is for Alphabet to spend a lot of money and for them to spend less because they're being too cautious, and then for Alphabet to eat up market share, right? So they're going to spend a lot of money too, which means companies like NVIDIA are going to continue to grow. Now, NVIDIA has just insane growth. They are reporting late this earnings cycle, but they're supposed to have a next 12 months PE of 20.3, which is about what the stock market is, like the S&P 500 is. Keep in mind, they're growing revenue at 85%, growing EBITDA at 200%, growing free cash flow at 85%, EPS at 215%. So most likely, and they have so much cash, like this, they have basically zero debt, 80 billion of cash. They are going to have more money than they know what to do with. Like they're buying back shares, sure. It's 1% a year. That's where the majority of their capital is going right now, but it's still stacking up quickly. Like they had 50 billion in free cash flow last quarter. So they're going to have a hard time unless they just start paying out huge dividends or just saying, we don't care what the share price is. We're going to just buy back way more shares. And I don't think share buybacks are the worst thing in the world for them anyways, because they're at a 24 PE growing 100% a year. Like it's not a really expensive stock. But this is going to help NVIDIA, which is one of the top 1 or 2 largest companies in the stock market. It's going to help it continue to outperform or start outperforming again, because it hasn't really done a ton recently in the last 3 or 6 months. Now, one company that's not getting much love today is Melly. Melli is Mercado Libre. It's a fintech slash Amazon-like company in Central and South America. They're much smaller than Amazon, but they are kind of a retail favorite. If you look here, they are just a $91 billion company. 92 billion. They're growing very quickly though. They are known for being one of the only company to grow 30% for 30 consecutive quarters. And a lot of the time it's floating between like 35 and 45%. But yeah, they had extreme growth back in 2020 of 100%. They're ramping up growth to 50%. So they just had a 50% revenue quarter. So they grew revenue by 50% since last year. They beat on earnings per share, $9.19 versus $8.58 expected. Sales were just over $10 billion versus $9.6 expected. So they beat by 5% on revenue, and they're actually down today. Now, part of the reason Wall Street does not seem to really like this company over the last couple of years because they're reinvesting a lot of their capital, similar to Amazon or Google. Now, they have a lot of cash on their balance sheet. They're in a good cash position. They have good earnings per share. They have extremely high revenue growth. Free cash flow looks explosive, but keep in mind they're a fintech platform too. They're helping a lot of individuals bank for the first time because a lot of Central and South America are underbanked or unbanked. So they have this flywheel effect where they can get people onto their platform and then get them credit cards and then or different loan products in general, different banking products, and they know a lot about the customers, so their defaults are lower. This is sitting at a 41.5 PE next 12 months, which might seem expensive. It is more expensive than something like Amazon or Google, but it's also growing a lot faster. Like Google, I love Google, but it's at like a 25, 26 PE. They're growing revenue by 20%. Melli is growing by 50%. And they're still profitable. Melli's still profitable. It's under $100 billion. I think this is probably the most confident I am in a stock that's under $1 trillion market cap. Like I'm very heavily weighted towards Amazon, Microsoft, Google, and Meta. But of anything smaller, like I have some Uber, Netflix, a few others, Melli, I'm more confident will outperform and will do really well over the next 5 or 10 years. They're very long-term focused, very similar to Amazon, where they are reinvesting almost all of their capital back into the business. They're not worried about return of capital. They're not worried about buying back shares or paying dividends or anything like that, which Wall Street doesn't really like. But it's just such a great company that's been growing so quickly. Keep in mind that this has come down in price a lot. Like back in 2020, this thing was negative priced earnings. Then after that, let's actually look at the 5-year here. After that, it went up to like 1,000 priced earnings. A year after that, 170. Year after that, 80. Year after that, 60. Now it's sitting right around that level. Next 12 months though. So I guess the trailing 12 months is a 49 PE. Next is 41. 2027, 32. With this kind of revenue growth and profitability, future profitability, I think this is bound to be a $500 billion company in probably 5 or 10 years. Like it just, I think once they have better scale, they'll ramp up profitability, or maybe they'll keep it like Amazon and just continue to grow for decades. So this is one that I am watching right now. I'm invested in it. I'm changing how I'm investing a little bit so that I have less decisions to make throughout the month. So most likely in a couple weeks, if it's still at this level, I will be buying some more. But yeah, I think this actually reported really good earnings, but Wall Street doesn't like the lack of, I don't want to say profitability because they are profitable, but the lack of the fact that they continue to reinvest in their business. So let me know your thoughts on that underneath the video. Now, Bitcoin's sitting right at 64,500. Seems like it's been right around this level for the last month. That's because it has been. within a couple $1,000s each way. Keep in mind, Bitcoin topped October 6, 2025, over $126,000. That's 2 months from today. It's been 10 months since we topped. Since then, we've come down about 50%. We were down further before, but we're down about 50% now, almost exactly. Typically, we bottom almost exactly a year after we topped. It can be plus or minus about 20 days, but that means that we have about 2 months to wait until we typically bottom. But most likely, Bitcoin's going to get worse from here. At some point this month, by next month, October, maybe even November, we're going to have big slides down, big liquidation events. Might not seem like it now because right now Bitcoin's stay pretty steady, but that's also very typical in a bear market is we kind of just go sideways and then maybe up a little bit and then massive liquidation event to a new low. I'm expecting that to happen. So I'm ready to buy some more, but this is just where we're at. So if you haven't already hit your stacking goal, you probably have about 2 to 4 months left. 2 months till we typically bottom, maybe 3. And then usually you can buy on the other side of that as well, around the bottom. It might not be the exact bottom, but maybe similar, maybe 5 or 10% above the exact bottom. Of course, we won't know that it's exact bottom during that time, but a lot of people will be pointing towards it. So yeah, you have a little bit of time to get your stuff together. Just something to pay attention to. So be ready. Be ready if we do see some dips. Don't be scared. Right? That's pretty typical. There's going to be bad news at the bottom, just like always. People are going to be scared. People are going to be wanting to sell. Just be ready for that feeling and embrace it. Let me know your thoughts, though, underneath the video. I do appreciate you all watching. I'll see you in the next one. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.